What is the trajectory now for loan loss provisioning? Do you think we've passed the worst? Does it peak soon? What is the visibility like?
Our loan loss provisions in Q2 were around 700 million, which is a decent amount, which is why we are break even for Q2. But those provisions were down on Q1, and we expect impairments for the second half of the year to be again below the first half of the year. So it's possible we peak for this year. We expect impairments again to be elevated next year, but likely down on this year. So we're hopeful we've seen the worst in terms of overall impairments.
I wonder about the investment bank performance in the quarter and your plans for the division, for the unit in the future.
Yeah, our corporate bank outside Europe had a tough quarter. So most of those provisions, that 700 million, was in our corporate bank, and within that, a lot of that was in our global business. Our plans for that business going forward, outside Europe, we intend to wind down that business, and that's about 10% of the group. And that reflects our decision to focus the bank and the corporate bank on our home market of the Netherlands and Northwest Europe. We want to de-risk the group to a moderate risk profile, and we want to align the whole group to a common strategy. So we want the corporate bank to work closely with our other businesses here in Europe, and here in Europe we'll invest and grow those businesses.
So more focus on the core, more focus on the European business then, Clifford. Did you consider selling the parts of the business that you're now going to take 3 or 4 years to wind down?
That business, as I said, is around 10% of the group in terms of capital. We'll work with those clients and we'll take our time in what is still a tough environment to wind down a business. And we'll do that to optimise the value of the group and do the right thing for our clients. We expect that wind down to be capital accretive over that period.
The CIB had some very large losses on individual clients recently, Clifford. How was it possible that ABN Amro was involved in so many write-downs, and what are you doing to improve controls in that business?
Well, the environment has been tough, and we're a big bank that operates around the world. So we've seen perhaps more than our fair share of issues. We've taken a good hard look at our risk appetite across our businesses, in particular in the corporate bank and clearing, and tightened up our risk appetite where necessary. And as you can see, we're de-risking further some of those businesses where we've seen elevated impairments in the past.
I suppose that you were offering some of those non-European investment banking activities to satisfy European clients who wanted a global product. What's your assessment of whether this will damage what you can do in Europe if you're not able to operate as internationally in terms of corporate and investment banking?
Yeah, we think that will have a very limited impact. We'll maintain our activities in clearing, which is a niche business where we are top 3 globally, so that will remain our global business. Within Europe, we'll engage in the shipping business, which is clearly an international business. But for the other businesses in other parts of the world, the US and Asia, they were primarily local-to-local businesses. So we're confident we can maintain and grow our franchise here in the Netherlands and Northwest Europe, and we'll do so over time.
There in the Netherlands, you are, ABN Amro is under criminal investigation by the Dutch public prosecutor for lacking money laundering controls. Can you tell us anything about how those discussions, how that probe is going, and whether or not it's possible that you reach a settlement?
Look, it's ongoing. I've got no further update. As you'd expect, we're cooperating fully with that investigation, and we'll update you when we have news in due course.
Yes, I suppose that to be expected, Clifford. Let me ask you about the operations, the day-to-day operations of the business with the COVID-19 pandemic past its peak, hopefully, for Europe. But what does this mean for the way you're able to operate the business at the moment? What day-to-day challenges does it still present?
Yeah, here in the Netherlands, we have what we call an intelligent lockdown. So what that means is a relatively soft lockdown, which started to ease from mid-May. And we've seen consumer confidence rising steadily since then. The government has been really supporting the corporate sector and the private sector here well, together with the banks. So we've not seen any spike in bankruptcies here in the Netherlands. Clearly, we're cautious going into the winter, both from a health perspective and as government measures ease. But I'm cautiously optimistic, personally, that the worst is behind us in terms of health. We're clearly watching the economic statistics closely, but I'm pleased to see that the Netherlands' track record of resilience and outperforming the Eurozone economy is still very much in the case. And
is the retail business...
We feel good about the Netherlands and Europe. Yeah.
We're looking at some video of a retail. We were looking at some videos of a retail branch. Is the retail business, Clifford, going to stay the same then, or do you foresee changes, substantial changes for the way retail banking is done?
Yeah, we've seen change in the past. Here in the Netherlands, we're a leader in the adoption of digital, both the bank and our clients, clearly. And we've seen a step change in that digital adoption over the last few months. We have around 100 branches here in the Netherlands, so not that many for a population of approaching 20 million already. We now have really stepped up our video banking. So almost all our mortgage consultations are done through video banking. And we're seeing our clients across the business, our private banking clients and our commercial banking clients, really like video banking. And now that they've used it, we don't think they'll go back to the old face-to-face in quite the same way as before. So I think what COVID has done is really accelerated and built on past trends.